Every day, chat and chart live during the New York session. Here, real traders share the raw truth, their mindset, technical analysis, and execution. This is where real traders show their skill set. Welcome to Trading TV. This is your stage to shine.
Hello, good morning, and welcome to a new episode of Chat and Chart. This is the London session open, and this is your host, Saif Qaddoura. Hope all is well. As always, we're going to start with the weekly high impact news calendar, go day by day, see what to expect next week, and then we move to the charts. So without further ado, let's move to the high impact news calendar and start with Monday, which is today. We have the King's birthday in New Zealand, so that's an all-day holiday in New Zealand. Nothing of high impact in my opinion. Then we have the numbers coming from the US. We have the S&P Global Manufacturing PMI. We have the ISM Manufacturing PMI, and we have the manufacturing prices as well. So let's leave these for later, but let's focus for now on the S&P Global Manufacturing PMI. Now, the previous was 55.3, which was pretty decent. It's above 50, so it's expansionary, and it's well above 50. It's at 55, so that shows strength in the global manufacturing, or the S&P Global Manufacturing PMI. On the other hand, the Chicago PMI wasn't doing very well last week, but the global manufacturing is good. So regional is not good, international is good. Then we move to the ISM Manufacturing PMI and prices. The expectations are a slight improvement to 53.3 in comparison to 52.7. So it's expansionary and expected to become better than the previous. The prices reading, however, is expected to be higher at 85.3. So what does that mean? It means that the costs are going up, input costs are going up. So this will eventually translate into higher PPI, higher price, producer price index, and then eventually a higher consumer price index, which means higher inflation. So this is not a very positive reading, but it's a positive reading for the USD, not for the economy. So why do I say that? Why is it positive for the USD? Because it means that rates have to stay higher for longer to fight this inflation, or to neutralize that inflation. So higher interest rate on any currency in the world makes it more attractive, which means more attractiveness. So higher rates and positivity for the currency, in this case the XY. Hello, good morning, Freedom. Okay, and I'm not sure how to pronounce your name, but I can read Kumar, so good morning, Kumar, too. All right, so that's it for Monday. We move to Tuesday. We have only 2 data points. We have the CPI coming from the Eurozone. The previous was 3%, which is already very high. Given that the CPI, this exact number came at 1.9% before the war, and now look, we're at 3%, and we're expected to get 3.3%. So that's what the war does to inflation numbers. That's a live demonstration of what wars do to inflation. So now we're expected to get higher higher inflation. So meaning that the Euro or the ECB, European Central Bank, is not going to cut rates anytime soon, because they will need some interest rates to fight off this aggressive inflation that has been attacking the Euro economy again. And then we have the job openings coming from the US for the month of April. So yeah, that's a delayed number. So the previous is 6.866, and the forecast is a very slight improvement. So I think this can be just um, like overlooked. Why? Because if it comes in much higher, then yeah, like if it surprises to the upside or the downside, then yeah, some like it might move the market. But if it comes in very close to the forecast, which is very close to the previous, nothing will happen. So yeah, the main event here on Tuesday is going to be the CPI. All right, then we have Wednesday, June 3rd. We had the ADP non-farm employment change. The previous reading was 109,000, and the forecast is 116,000. So an improvement to the upside, which is positive. And this number, guys, it usually gives us a preview of how the how what to expect from the NFP. So this number is coming on Wednesday. On Friday, we'll have the NFP, the non-farm payrolls. So this number is usually used by traders as a preview of the NFP. So it's expected to be positive, meaning that the NFP is expected to be positive. We'll get to the NFP in a bit, but for now, that's for the ADP. It's expected to be positive or expected to improve. Then we have the S&P Global Services PMI. The previous is 50.9. The forecast is 50.9. So no changes whatsoever in the S&P Global PMI numbers. Not services, not the manufacturing numbers. Both are expected to stay unchanged. So the services PMI show an identical reading of 50.9 points. Then we move to ISM non-manufacturing prices and non-manufacturing PMI. The prices, we don't have a reading yet. We don't have a forecast yet. And the PMI is expected to be slightly better at 53.8 in comparison to 53.6. Pardon me 1 second, please. Sorry. Okay, so the non-manufacturing PMI is expected to be slightly better than the previous, but it's still above 50, so it's expansionary, so it's still good. The crude oil inventories, we saw like serious shortages showing in the inventories, especially in the US. So we have to wait and see. But if we have any deeper draw than this or any deeper shortage than this, we're going to see some positivity on oil prices. Why? Because higher higher demand, lower supply mean higher prices. Hi, Soham. How are you? I'm good. I'm good. Good to be back, actually. All right. So now we move to Thursday. We only have the initial jobless claims. That's the weekly number. Still relatively low at like early 200,000s. So that's fine. That's still a positive number, regardless if it comes in like higher 4,000 less, like for the 4,000 plus minus, that's still positive for the US economy and the jobs market, to be specific. Finally, on Friday, this is the big day. We have the average hourly earnings, which are expected to be better, the non-farm payrolls, which are expected to be worse, and the unemployment rate, which is expected to stay unchanged. So all of these three um, make something we call the jobs report. So the jobs report overall look somewhat positive for the jobs market and the US dollar, but we will have to wait and see and be prepared for any surprises to the upside or downside, especially on Friday. So yeah, that's pretty much it for the calendar. I'm going to move to the charts now. Take a quick look at the charts and prepare for the week ahead. All right. So now we stop sharing this, and then we go and share this. Okay. All right. Yeah. There it is. So as always, we start with the DXY chart. This is a daily. No, we start with a higher time frame. Why? Because today is June 1st, so it's the beginning of the month, which means that we have a new monthly candle today. So it opened today. So let's take a look how the previous monthly candle closed. Somewhat bullish, if you ask me. It's above two very important moving averages. It's still below the 99.6. If it closed anywhere above this, that would be very, very bullish. But now it's somewhat bullish. Okay. Then the weekly closed like on Friday. We saw some what's it called? Not Friday. I think Thursday. On Thursday, we saw some strength in the XY, and then we saw a reversal to the downside on the short-term trends. So it's not a reversal like a major reversal, but that's a reversal on the short-term trend, like on the daily trend or like the intraday trend. All right. So it was trending up nicely, and then it got rejected and closed downwards. Let's see it more clearly. So here's Thursday. Yeah. On Thursday, it went up. If it closed around this area, then that would have been very bullish. But it got rejected and closed here, and then we got stuck around this area. But still, on the daily, we're still positive. We might see a drop towards 98.5 tops. I don't think we're going any lower than this. And then we can continue going up, or we can continue to go up from this point. So we can continue going up from 99, basically. Yeah. We can continue to go up from here. All right. So that's for the DXY. Yeah, it's somewhat ranging on 4 hours, guys. If you look at this, like it's still ranging. We had this. Take a look. We had this range here, right? Then we broke below and then we closed inside again. So this is a bullish sign that we're going like this might have been just like a liquidity sweep, and then we might be heading upwards. So I know this might look somewhat bearish, but it's actually not. It's bullish. Okay. Pardon me. All right, all right, all right. Yeah, so that's it for DXY. Now I think it's time to move to the euro. So the euro, let's see how it closed. It's the exact opposite of the DXY. So it closed lower, and then the monthly closed somewhat bearish because the DXY was somewhat bullish. So this is somewhat bearish. The Euro USD on the weekly, like it was going to break lower and then got rejected on Thursday. The exact opposite of what happened in the DXY. Still looking good. Yeah, as long like we're below most of the major moving averages, which are the 126-day moving average, the 200-day moving average, the 20, the 50. We're still below most of them. We're only above the shortest one, which is the 10-day moving average. But other than that, we're still below most of the major moving averages, which is a bearish sign. And like in contrast, the DXY is still above most moving averages, so it's still bullish. Okay, let's move to the GBP/USD. It should look very similar to Euro, but let's take a look. Yeah, the monthly closed very similar to the Euro, the weekly as well, but it's still like it closed a little bit weaker than the Euro. The daily, yeah, I think it's going to be stuck here for a while because look at the cluster of moving averages. It's trading uh, like through. So yeah, I think it's going to be stuck here for a while unless we see a breakout to the upside in DXY. Okay. What do I think about Nasdaq? We'll get to Nasdaq in a bit. Okay. Um, let's move to USD JPY. Yeah, it got rejected from here and it's going upwards. ADSD, yeah. Okay, so gold last week did something very interesting, which is break below the 4,400 for the first time since I don't know, like how long was that? Yeah, so this was uh, 2 months ago. 2 months, yeah. So this is the first time in 2 months that gold has broken below the 4,400. So this might be just like a sweep, or in my opinion, I think it's going to it's just leaving breadcrumbs for the market for it to go back to the same place, and like it's just like it's marking this area as broken for it to go and get some liquidity from the upside and then go move downwards again. So that's my theory. But let's analyze it. Um, the monthly closed bearish, so that supports my theory, and the weekly closed somewhat bullish. Why? Because like if it closed here, then it would have been very bullish, very bearish. Sorry, but since it got rejected here because of the US dollar and the DXY, do you remember the rejection on Thursday that we talked about on DXY? That's what caused this rejection as well. So so what happened here is that it closed above this area. So now I'm expecting one of two things: either like a very strong bearish momentum to the downside, and then it breaks and continues to this area, which is 3,800 and then 3,600, or we might be moving to retest this, which is 4,630, 4,640. So it's between 630 and 40, and then we continue to go down again. So it's one of the two scenarios. The most probable one is for it to continue up towards 640, but for now we have to wait and see. And if you remember the economic calendar that we just went through, it has a lot of high impact news this week. It has we should expect very high volatility, especially that we have the NFP, we have the ADP employment change, we have the initial jobless claims, we have many things. Even crude oil inventories at this point is going to move the markets. Okay. You have a sell running from 567. Great. That's a great sell. Where's your TP, and have you moved your stop loss to break even or not yet? That's a 600 point trade so far. Okay, silver is still looking the same. Yeah, so silver might stop dropping and go up from here, but I still doubt that this is the case. I still think silver is going to do something like this. So we might be moving back towards this area. Imagine. So anywhere around $50 per ounce, I'm buying silver. Like I'm going to seriously buy silver. Okay, platinum. And here's Nasdaq. Oh my God, that's very bullish. Okay, the Nasdaq is very, very bullish on the monthly. It closed pretty bullish. Weekly is very, very bullish as well. Daily is very, very bullish. So that's the easiest pair to analyze in the world. Like it's just bearish. Period. That's it. Okay, are we seeing some signs of weakness here? 1 second. And we had this. So as long as we're above this trend line, so when does this trend line break? Once we break below 29,500. So that's the pivot point. But like not necessarily, like it could just like sweep it and then go back up. But no, that's way too far. So imagine, like I'm telling you, in order to break this trend or uptrend, the short-term trend, even like the intraday trend, you need to break below 29,500, which is 1,000 pips away. But if you want to be like sure that it broke, you have to wait for 2,000 pips to the downside before you like start shorting. But that's not the problem. Imagine having to short something that is this bullish, okay? Like nothing. There's nothing called like having to short. But imagine that your strategy or your setup told you that here we short the Nasdaq after it breaks this level, which is 28,500, for example. The problem is your closest stop loss is going to be at the all-time highs, 200, yeah, 2,000. Yeah, I think even more than 2,000 pips away. So that's the problem. That's why, as long as it's moving this hard, I prefer to stay away from the Nasdaq, the S&P, and even the Dow Jones. Look at the Dow Jones; it's like it's just flying. Okay, I only buy indices. I only buy. Why? Because they've been going up since forever, literally. Yeah, here it was like remember in March when it dropped to 45,000, it just like recovered 6,000 points like nothing. And the war still hasn't ended. Imagine. Okay. Stop loss at 621. I would move it to break even, bro. Thank you, Yahya. Same to you. Good morning. And a very goodbye to from 316. Bravo. Easiest pair to analyze, yet the trickiest. Exactly. That's what I was saying. Like, the problem here would be that your stop loss is very far off. It's like in another country, man. Like, if you were selling any index, your stop loss is minimum 1,000 pips, which is crazy. All right, guys. So I think that's it for today. Before ending, let me just take a look at the, yeah, it's starting to drop. Let me just take a look at the Bitcoin I was saying. So I think once we break this area, we're going to start dropping sharper. We're still somewhat like in the first half of the year, but the first half of 2026. But if we wait a little bit, I think we're going to see or to get much greater opportunities this year, closer to Q4 of the year. Usually Q2, Q3 are not very impressive. They're not very, what's it called? They're not filled with opportunities as we want them to be. Q1 and Q4 are the most they're the most favorite to me. So I don't know, maybe that's just me, but what I'm saying is we still have much to go this year, and we still have like what 7 months to go. Imagine how many opportunities we have left this year. We might be able to short the euro from this area to a very low price, maybe like parity, which is 1.000, or we can just wait for the silver to buy it from 50 maybe, or maybe 45 possibly, and like quadruple our position. Or we might be able to buy gold at 3600 or 3800 and wait for 6000. That's all of these are very easy trades, but they need patience. You need to be very patient and wait for those to materialize. You need to see your strategy, you need to see your method, and you need to see your setup materialize before your eyes, so that you can capitalize on all of these opportunities. Okay? So patience, 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 and good luck trading this week. I hope this was a helpful session. I enjoyed it. I hope you did. So I'll see you soon, and take care of yourselves. And as always, trade it. Bye bye.